Good morning. I am Jai Kumar, Assistant Professor, Department of Management Studies, SNS College of Technology. Now let us discuss on the topic tax issues in dividends. So dividends are the payments made by the company to its shareholders from its profits. In many countries, including India, dividends income is taxable in hands of shareholders. The tax rate depends on the shareholders' income tax slab and the applicable regulations. The company may deduct the tax at the source before distributing dividend above prescribed limits. Shareholders must report dividend income while filling their income tax returns. The proper tax planning helps investor maximize the post-tax returns from the dividend investments. And dividend taxation framework explains the rules governing how dividend income is taxed for shareholders. The companies distribute dividends from their profits and shareholders receive them as investment income. Under the current system in India, dividends are generally taxed in the hands of the recipients. Tax liability depends on the investor's income tax slab, residency status, and the applicable tax provisions. Tax deduced at source may be applied when dividend payments exceed prescribed threshold. Understanding the taxation framework helps investors access the actual return earned after the taxes. And regarding the DDT revolution, before 2020, the companies in India paid dividend distribution tax before distributing dividend to the shareholders, whereas the shareholders generally received dividends tax free, except in certain high dividend cases. And the DDT system often led to double taxation concerns and increased the cost of distribution profits. In the 2020 union budget, the government abolished the dividend distribution tax regime. After 2020, dividends became taxable directly in the hands of the shareholders according to their income tax slab. This shift improved transparency and aligned India's dividend taxation system with global practices. And the current tax rates by the investor category represents the resident individual investors are taxed on dividend income according to their applicable income tax slab rates. Domestic companies receiving dividends pay tax at the corporate tax rates prescribed under the Income Tax Act. The partnership firms and LLPs are taxed on dividend income at the rates applicable to their business entities. No resident Indian, non-resident Indians are generally subject to tax reduced at the sources, subject to tax treaty benefits. Foreign institutional and portfolio investors are taxed as per applicable provisions and international tax agreements. The effective tax burden varies based on the investor category, residence status, and the available deductions or treaty reliefs. And there are certain critical tax issues in dividend taxation. And double taxation may arise when corporate profits are taxed before dividends are distributed to the shareholders. And the tax deducted at the source can reduce the immediate cash receipts and after affect the investor liquidity. And different tax rates for resident and non-resident investors create compliance complexities. Frequent changes in tax laws may increase uncertainty for companies and investors. International investors may face cross-border taxation and treaty-related challenges. Proper reporting of dividend income is essential to avoid penalties and ensure the tax compliance. So, design thinking approach applied to taxation issues involve solving dividend tax challenges. The emphasis says represents the understanding the tax concerns and the compliance difficulties faced by the different investor groups, whereas the define stage involves identifying the key challenges such as double taxation, TDS issues, and complex reporting requirements, whereas the ideate stage represents the solutions like simplified tax rules, digital filing systems, and investor-friendly guidelines. And prototype involves developing sample taxes calculators, automated reporting tools, and compliance frameworks, whereas the test stage involves evaluating the effectiveness of the solutions through investor feedback and practical implementation. And finally, the implement stage represents refine and adopt the best solutions to create a transparent, efficient, and investor-centric tax systems. And I have given certain some examples of real world examples of impact of budget after the 2026 changes. And to conclude, dividend taxation plays a vital role in determining the actual returns earned by the investors. The shift from the DDD regime to shareholder level taxation has increased transparency and accountability, and different investor categories face varying tax obligations based on their status and applicable laws. Effective tax planning and compliance helps investors maximize post-tax wealth creation. A simplified and investor-friendly tax framework can promote generate greater participation in equity markets and support the economic growth. So with this, I'd like to thank everyone for the opportunity. Thank you.